Couple of interesting issues. We've got the Bank of Kenya, Kenya Airways, but let's start with housing finance, a 396 million shilling after-tax profit in the third quarter. Just give us the context for housing finance, the kind of company it is, and what you make of these results.
Yes, I think housing finance is a leading mortgage finance provider in the Kenyan market, and its sole business is really the provision of mortgage financing and property investment. The company has in the recent times been involved in raising funds for purposes of being able to finance property investment, especially because it's been relying on short-term deposits. But recently we saw last month they actually were able to conclude the raising of a corporate bond to finance the property investment. So that has been a key aspect of their strategy. And what we are now seeing is the result is those efforts in terms of enabling them to be able to successfully venture into not only provision of mortgages, but also developing properties for onward sale to various investors. So it's a business that has transformed over the last few years, and we're now seeing the results of those developments.
Are they answering to shareholders here? Are they under pressure to deliver certain kinds of returns, or is it more the kind of statist or service kind of investment model?
I think it's obviously they have shareholders, and some of the key shareholders are some of the banks, leading banks in the country. And obviously there's the need by shareholders for them to deliver a return, and hence efforts that they've been making to, for instance, recently being able to open current accounts, which they were not able to, and that would enable them to be able to access long-term funds from various investors. And I think over time, with what's been happening in the property development market over the last several years, I think they have, they're well placed to be able to benefit significantly from this strategy.
I see one of the points I have here in the news from the company, their growth was in line with their strategy not to pass on all costs of credit to customers. You've got to be careful about that, haven't you? I mean, in a good year, you could say, well, let's shield the customers from the full costs. In a bad year, you might have to increase your costs by a greater amount, thus, passing on too much at once to the customers. Is it a philosophy of theirs, or is it a one-off?
I think for all banks and financial institutions in the country last year, one of the major developments was a drastic rise in interest rates. Because of the very high inflation and the weakening of the currency last year. So that drastic increase resulted in banks having to raise their base lending rates. In view of the need to protect a lot of the borrowers, the banking sector, in conjunction with the Treasury and the Bankers Association, came up with a strategy to try and shield the clients by either extending the loan period and therefore try to shoulder some of the costs. And I think that is one of the things that housing finance also did, along with other banks. So you're right. The issue of trying to managing the costs and also trying not to result in a situation where you'd have an increase in the bad loans would be an important strategy.
Interesting. It just shows how careful companies that lend have to be when interest rates and inflation are so volatile. You'd mentioned the banks. Let's talk about the National Bank of Kenya. This looks to me like a big number, 68% drop in pre-tax profit, although it's still a profit, 577 million shillings. Where does that sit in the Kenyan banking sector, and should we be concerned about such a big drop?
Yes, I think National Bank tended to back the trend that we saw in the banking sector over the last several months. And the reason for the decline largely has to do with an increase in deposit costs. They had to significantly increase their deposit rates. And I think what also happened is that they were also not able to correspondingly increase their lending rates at the time when the banking sector, when the central bank started reducing interest rates. So I think it's a question I would imagine the timing in terms of how to balance between the deposit costs and also the lending rates. And it also has to do to some extent also with their investment portfolio, particularly in the bonds. because again, the drastic rise in interest rates last year also had an impact on bond portfolio. So I think it is a cause. It may be a cause for concern, but I think the bank has also been on a profit growth trend from a few years back when it was actually facing serious financial challenges. So I think it's still on the profit growth, but I think my view is that it's backed the trend that we've seen in the rest of the banking sector in the country.
Interesting again, talk of how in that field of the economy, interest rates being volatile affects things dramatically. Just talking about Kenya Airways, a couple of days ago we reported about them appointing a marketing director. I expressed some surprise. Yes. I mean, after the pilots in an airline, it's such a competitive and difficult industry, you'd think that the marketing director would be the next most important person. They appear to have only appointed one now. I presume they were doing some marketing before they appointed the director. And they had this huge loss. So do you expect an effect on this?
Yes, I think the major change in terms of this appointment is that as opposed to the fact that the previous marketing manager, marketing function reported to the commercial director, I think this particular position now reports to the managing director. And I think that is a reflection of the seriousness with which those efforts to enhance its profile within the target market is really placed. And also the need to obviously grow the passenger numbers as reflected in the results that were released a few weeks ago. Obviously the industry and the company has faced challenges in terms of the customer numbers. A lot of it has to do with the European region, with the financial crisis happening that continues in the European Eurozone. That represents a challenge, and therefore there's need to try and diversify the passenger sources for the airline. And also we are aware that there's a lot of competition, particularly on the low budget airlines within the continent. So I think it is important for the airline to increase its profile across the continent, which is actually the largest its largest customer base. So hence the need for the position.